Welcome to the Depth Dive.
Yeah.
So you've brought us a pretty interesting list of stocks today. We've got BJDX, AEHL, WTF, AREB, and JNVR.
That's right. Quite a mix.
Yeah, so our plan for this deep dive is really to cut through the noise, get straight to the core insights from the research you've gathered right as of today, April 9th, 2025.
Exactly. We're looking at what these stocks might be doing next based on the info from places like Yahoo Finance, stockinvest.us, that kind of thing.
Trying to give everyone that quick download, the stuff you really need to focus on.
Precisely. Synthesize it, make it understandable without getting lost in every single detail.
Okay, cool. Let's jump in then. First up is BJDX, Blue Jay Diagnostics.
Yeah, BJDX. They're a medical diagnostics company based out in Massachusetts. Symphony platform, AREB tests. It's on their site, bluejdx.com.
Right. And the price today, April 9th, close?
Closed at $2.48. Saw a tiny, tiny bump after hours up to $2.50.
Okay, but what's the recent story there? Because the price itself doesn't tell you everything.
No, it doesn't. And the recent performance is actually pretty significant. It's down 23.18% just in the last 10 days.
Wow, okay.
And just over 19% down over the last 3 months. So, yeah, they've definitely hit some turbulence recently.
Okay, so recent challenges. But what about looking forward? Any predictions?
Well, yeah, this is where it gets interesting. Like you said, the models are actually predicting a potential rise, about 7.26% expected in the next 3 months.
Okay, a potential rebound then.
Potentially. And they've put this 90% probability range on it, between $3.16 and $8.05.
Right, so explain that 90% range again quickly. It's like their best guess window?
Yeah, basically. Based on their analysis, they think it's highly likely, I got 9 times out of 10, that the price will stay within that $3.16 to $8.05 band over the next 3 months. Not a guarantee, of course, but a probability window.
Gotcha. And I see something here about the predicted opening price today.
Yeah, that's another point. The prediction model actually thought it should open higher today, around $3.21, but it closed lower at $2.48.
So it underperformed the prediction today.
Right, and that, combined with the volatility of the ATR 14 is $1.13, which is like almost 40% volatility. It tells you this thing can swing quite a bit day to day.
Okay, so high volatility, recent drop, but a potential rise predicted. What's the bottom line rating?
It's rated as a hold accumulate candidate right now, but interestingly, the score itself represents a downgrade from a previous hold rating.
Huh. So kind of mixed signals then. Potential upside, but maybe some caution warranted because of the recent performance and volatility?
Exactly. It's not a clear buy or sell signal. More like keep an eye on it, maybe accumulate slowly if you believe in the turnaround, but be aware of the bumps.
Okay. Let's shift gears completely now. AEHL, Antelope Enterprise Holdings. This one sounds dramatic.
Oh, yeah. Today was pretty wild for AEHL. They're into live stream e-commerce, business consulting, mainly in China. Used to be China Ceramics, actually. Headquarters in New York now. Site is alltd.com.
Right. And the price action today. Just, wow. What happened?
So it closed at $4.45, but that was after an absolutely insane intraday ride. It opened at $2.26.
Okay.
Then it shot up to a high of $8.41 during the day.
Whoa. From $2.26 to over $8.
Yep. Compared to yesterday's close of $2.18, that's a 104% gain just today. Now, it did pull back in after hours, down to $3.28, but still.
That's an incredible move. What on earth could cause something like that? Any specific news pop up?
With that kind of massive jump, especially in that sector, you'd look for things like maybe some positive regulatory news out of China or perhaps a big partnership they announced that caught the market's attention. Something significant had to trigger that. We need to dig into their specific news flow.
Makes sense. And the recent volatility overall.
Oh, it's extreme. Absolutely extreme. Over the last 3 months, while the S&P 500 was down, AEHL was up. Nearly 1,100%.
1,100%.
Yeah. Staggering. And the average daily price swing over the last week was 27%. So the sources are definitely calling this one very high risk. Part of that might be periods of low trading volume, where it doesn't take much to move the price drastically.
Okay, so incredibly volatile, huge recent gains. But what's the prediction? Still going up?
The prediction is, yes, likely to rise further. About 20.25% potential gain in the next 3 months.
But I bet there's a catch with the range.
You betcha. The 90% probability range here is incredibly wide, from just over 10 cents.
10 cents?
Yeah, 0.106 on the low end, up to $5.14 on the high end.
Wow. That That barely narrows it down at all. Really highlights the huge uncertainty, doesn't it?
It absolutely does. It screams uncertainty and risk. Interestingly, though, the current rating is actually buy.
A buy rating with that range.
Yep, and the score was recently upgraded. So there's some optimism there despite the craziness. They even suggest a stop loss down at $2.06 to manage that risk.
Okay. So potential for more gains, but incredibly high risk and a massive range of possible outcomes. Handle with extreme care, basically.
That sums it up pretty well. Now, next on the list is WTF.
Right. WTF, Watton Financial Ltd, securities brokerage, fintech based in Hong Kong. Website watton.com. What's the story here?
Okay, so WTF closed today at $6.37. That was up from $5.85 yesterday, so a decent day, but a 9.7% gain. Day's range was between $5.50 and $6.75.
Oh. And recent performance?
Well, StockInvest.us didn't have the usual detailed breakdown for this one in the info we looked at, but pulling from other sources mentioned, it looks like it's up over 36% in the last week.
Okay, strong recent momentum then.
Yeah, and almost 44% up over the past year. Yeah. So definitely seems to be on a positive trajectory lately.
What about the future prediction? Like the others.
No, that's the really interesting part about WTF. Our main sources, Stock Invest, Trading Views, CNN Money, they didn't provide any specific future price target or percentage rise prediction.
None at all. That seems odd compared to the others. Why might that be?
Yeah, it is a bit unusual. It could mean a few things. Maybe it's just not widely covered by analysts. Less analyst attention means fewer public forecasts.
Right. Could be a smaller company or maybe in a niche that analysts don't follow as closely.
Exactly. That lack of coverage itself can be, a piece of data. It might mean less price transparency, maybe harder to gauge market sentiment compared to heavily analyzed stocks.
Okay, so positive recent trend, but a lack of forward-looking predictions from these sources. Good to know. Let's move to AREB, American Rebel Holdings.
AREB. Yeah, this one's kind of interesting. Based in Kansas, they design and market branded safes, personal security products.
And beer, American Rebel Light Beer.
And beer, yep. Their website, AmericanRebel.com, confirms it. Quite the product mix.
Definitely eclectic. What's the price situation?
Closed today at $5.58. There was maybe some after-hours interest noted around $6.06, so perhaps a little movement after the bell.
Okay. And performance data? Similar lack of detail?
Yeah, the specific recent percentage moves weren't highlighted in the text we have. But what was highlighted very clearly is the risk classification. Very high risk.
Oh, really? What is that?
Extreme volatility. The daily volatility figure given is almost 220%.
220%?
Daily.
Daily average volatility, yeah. And they note a recent single-day price move of $6.30, which is over 86% in one day.
Good grief. That's just wild swing.
Absolutely wild. Tells you everything about the potential for huge, rapid price changes here.
Okay, so definitely not for the faint of heart. Any future prediction despite that volatility?
There is. Expected to potentially rise about 13.84% in the next 3 months.
All right, seems reasonable, but I'm sensing another crazy range coming.
Oh, you are sensing correctly. Hold on to your hat again.
Mm-hmm.
The 90% probability range for AREB is from roughly 39 cents.
39 cents.
All the way up to $22.29.
That's an astonishingly wide range, even wider than AEHL's relative to the price. What does that even mean?
It means massive, massive uncertainty. The models are essentially saying, look, based on the data, it could go up a bit, but honestly, it could end up almost anywhere within this incredibly vast window. It could be due to their diverse business lines, maybe news flow, lack of consistent history. Lots of factors could contribute.
So even though it's rated a buy?
Yeah, it's rated buy, score unchanged. But that range just screams highly speculative. They do have a stop-loss suggestion, $8.58, which seems quite high relative to the current price, interestingly. Suggests maybe they expect volatility in the upside, too.
Cautious optimism amidst chaos, perhaps. Okay, last one. JNVR, Janover Inc.
Our JNVR.
Yeah.
Right. Commercial Property Financing Solutions online platform, based down in Florida. Website, janover.ventures.
Gained the price today.
Closed at $27.38. Did dip a little after hours, down to $26.50. And it's important to note, that close was actually down quite a bit from yesterday.
Oh, yeah.
So yes, yesterday's close was $32.82. So today's close represents about a 13% drop. A pretty significant pullback today.
Okay, so a down day today, but what about the bigger picture recently?
The bigger picture is pretty spectacular growth. Over the last 3 months, JNVR is up 465.86%.
Wow, over 460% in 3 months.
Yep. crushing the S&P 500 over that period. But again, high volatility, nearly 88% daily average.
Yeah.
And the RSI, the Relative Strength Index, is at 84.
And 84 is high, right? Suggests it might be overbought.
Generally, yeah. Readings over 70 are often considered overbought, so 84 is quite high. It suggests the stock has run up very fast and might be due for a pause or, well, a pullback like we saw today.
Makes sense. So future prediction after that run-up and today's dip.
Potential for another 13.67% rise in the next 3 months.
Okay.
Similar percentage rise predicted as AREB, interestingly.
And the range, please tell me it's not as wide as AREB is.
It's wide. Maybe not as astronomically wide relative to the current price as AREB, but still very wide. The 90% range is $4.72 up to $42.94.
Okay. So again, from potentially losing most of its value to gaining significantly more. A lot of uncertainty there too.
Definitely. Significant uncertainty, despite that overall positive growth expectation.
It's interesting we're seeing these super wide ranges for both AREB and JNVR. Do you think that reflects something broader about the market right now, maybe for these kinds of growthier, more speculative names?
That's a really good point. Yeah, it could well reflect broader market uncertainty, especially for stocks that have had big runs or operate in potentially volatile sectors. You know, the models might be picking up conflicting signals, positive momentum, but also maybe economic headwinds or sector-specific risks leading to these very broad outcome possibilities.
What's the rating for JNVR?
It's currently a hold accumulate, same as its previous rating, and there's a stop loss suggested at $31.07.
And you mentioned something about insider trading.
Yeah, the notes mention recent insider trading activity, specifically some significant sales by insiders.
Selling after a 465% run-up could just be taking profits, I guess, or could it signal something else?
That's the million-dollar question, isn't it? It could absolutely be prudent profit-taking after such a massive gain. Or it could suggest that insiders, who know the company best, perhaps see the current valuation as a bit rich or foresee potential challenges. It's definitely a factor to weigh alongside the other data.
Okay, wow. So let's try and pull this all together. 5 very different stories.
Definitely. You've got AEHL and JNVR with absolutely huge recent gains.
Right, massive runs. Then BJDX, which has been trending down significantly.
Yep. And AREB just showing truly extreme, wild volatility.
And WTF with recent positive movement, but kind of flying under the radar of the prediction models.
Exactly. And looking forward, the models generally see potential for growth in the next quarter for BJDX, AEHL, AREB, and JNVR.
And it's a big but. Those prediction ranges, especially for AREB and JNVR, are just enormous.
They really are. That's maybe the most unexpected detail across the board. It just screams market uncertainty and high risk for those specific names. Makes you really question what specific catalyst could drive those prices to either end of those huge ranges.
And we definitely saw the very high-risk flags on AEHL and AREB due to that volatility.
Absolutely. And maybe you could argue WTF carries a different kind of risk. The lack of analyst coverage and prediction data means less external validation or consensus.
It really feels like each stock has its own very specific narrative right now based on this data.
It does. Some driven by momentum, some by recent setbacks, some just by pure volatility, it seems.
And that silence on WTF's future price is almost as loud as the volatility figures for AREB, in a way.
I think that's a fair way to put it. It signals a need for deeper digging, if you're interested there. You can't rely on the readily available forecasts.
Okay, so just to quickly recap the numbers again for everyone. BJDX, $2.48 now, maybe plus 7% rise, range $3.16 to $8.05.
AEHL, $4.45 now, maybe plus 20%, but huge range, 0.1006 to $5.14, very high risk.
$5.58 now, maybe plus 14%, but that absolute massive range, 0.394 to $22.29, very high risk. And JNVR, $27.38 now after a dip, maybe plus 14%, also very wide range, $4.72 to $42.94. Huge recent gains, but overbought signals and insider selling noted.
Yeah, the recent performance contrasts are stark. The big winners, the loser, the volatile one, and the future uncertainty levels are all over the map.
So we've synthesized the info as of today, April 9th, from these sources. The different risk levels, the speculative nature of these predictions, especially the wide ranges, it's a lot to digest.
It is, and it really paints a complex picture, doesn't it? Contrasting performance, varying degrees of uncertainty.
Definitely. Which leads me to a final thought, really a question for our listeners to chew on.
Okay.
Given these really dramatic price swings we've seen, and especially those super broad prediction ranges for some of these, what does that actually tell you about the current market conditions overall, maybe? and about the specific factors really driving these particular companies right now.
That's a great question to end on. Yeah, what are these extremes, the volatility, the huge ranges signal about the wider market, or the forces acting on these specific, potentially more speculative stocks? Something definitely worth mulling over and maybe digging deeper into the news behind each ticker.
Healthcare companies often move differently than the broader market. Shorting health companies specifically might not provide a sound hedge against overall market movements, since they tend to have their own dynamics and influences. So, using healthcare companies as a hedge might not yield as effective protection as expected. Shorting healthcare companies can be a risky endeavor. Here's why. 1. Regulatory environment. Healthcare companies often operate under stringent regulations with varying government policies. Regulatory changes can either boost or damage stock prices. If a new regulatory framework is favorable, it can significantly affect the share performance of these companies. 2. Market sentiment. Healthcare companies are often subject to unpredictable market sentiments and investor psychology. A rise in healthcare costs or a public health scare could lead to increased demand, which is favorable for these companies' stock prices. When the Fear and Greed Index indicates extreme fear, it suggests that there's widespread pessimism and anxiety in the financial markets. This could be due to various factors like economic downturns, geopolitical tensions, or unexpected events that have caused investors to become increasingly cautious. During periods of extreme fear, market participants may withdraw their investments, leading to decreased market liquidity and potentially causing asset prices to fall significantly. Dear subscribers, I am thrilled to offer you an opportunity to earn a significant return on your invested funds. If you loan me a $20,000 sum, I will personally ensure a 10% return every year, with the money automatically zelled back to you monthly for 2 years. This is a fantastic chance to grow your investment with minimal risk, as your funds will be returned every month without fail. If you enjoyed this content, please like, subscribe, follow for more updates, and don't forget to sign up for the exclusive bonuses down below.
Listen up, traders, it's your lucky day. Quick gains insights is here to stay. Subscribe now, come join the fray. Financial wisdom will light your way. Join Quick Gains Insights today. Like this video, pave the way. Sign up in the description, without delay. 4,000 free insights today. Like this video, pave the way. Sign up in the description without delay. 4,000 free, let's slay.